Monday.
Money Mondays. What time do we do this?
Never gonna lift you up. Never gonna.
All right, we don't want to hear that. We don't want to hear that. All
Money
right.
Mondays, 3:30 Central. Welcome back, everybody,
Oh.
to the latest, and always the show that we're doing is always the latest. I can say it every time. To our latest version of Money Mondays, our latest episode of Money Mondays.
There you go. There you go. We try to keep it fresh every week, is what you're trying to tell me, right?
Absolutely, and
did I
more
just
importantly,
break-
we try to
did I
have
just break my
Ben not
mic?
break really expensive microphones.
They probably heard that quite a bit on there, but that's all good, people.
Well,
I was getting
luckily
excited.
we'll make Ben by that one,
A lot
so.
more arm gyrations than normal, everybody. So,
Sure. So Money
All right,
Mondays
man.
is every Monday, 3:30 Central. We typically do a lot of different topics. If you have ideas for future topics, let us know. Otherwise, we will guess at a topic that we think you may or
Yes.
may not like. But if you prefer
We're
it to be
throwing a
something you
dart.
like, you got to let us know.
we're throwing a dart at certain things and just being like, all right, let's talk about this week.
But
No.
today's episode, Ben, what are we talking about?
So we're talking about underwriting, right? And how insurance pertains to our underwriting process, right? And, some cool tools that we've kind of helped develop and,
Absolutely.
wanted to kind of show and share with our audience, right? Because we think they're pretty cool. And they've really, I guess, decreased the amount of errors that we've made in our insurance quoting process, right? Because you got to think about what's happening, right? Not everybody's going to be looking at this during business hours, right? Imagine you're up at Friday nights, 10 o'clock, just like I do. I have no life whatsoever, and I'm underwriting deals, right? And I'm looking at 5 deals, right? And there's some important pieces of data that you need to be able to underwrite, right? Maybe you can make assumptions on, I can get utilities down 5%, or payroll looks a little high. You can make those adjustments on the fly, right? But the two things that you're really going to need to shore up is going to be the insurance and then the debt.
Absolutely.
Right?
And speaking to one of the debt guys, right? He mentioned one of the first things he has his team do is actually be candid with the owners or the buyers, of, hey, where did you get your insurance quote, right? Because it does have a big impact on the loan.
No, it absolutely does.
I mean, it can kill your loan because, insurance, and it's not about just doing what the guy before you did, right? A lot of times you see that, right? Especially now we're looking at bigger, more institutional quality assets, and those guys might have 10,000 units on their insurance policy.
That's a
Guess
big-
what? They can get a better rate than most individual guys. So really understanding insurance and how that can impact your proceeds really matters, right? And maybe one more thing, and then I'll turn it back to Ben, is similarly, even, thinking about all aspects of insurance, right? Including flood, right? We've significantly boosted the valuation on some of our properties by getting rid of the flood issue, right? So again, every little dollar here or there of insurance actually turns into an 8x, 10x multiple on valuation. So really something to be conscious of.
And we'll give some shout outs to some of our vendors, right? These guys and gals have saved us a ton of money, right? I think I wanted to hit on that one point though. People underestimate how important this is, right? The one thing that the lender mentioned on our celebratory dinner last night, right, was, thanks for a smooth kind of closing processes, and part of that was making sure that we had the insurance, because the insurance in a lot of ways can blow up a deal, blow up a closing, right? Not only are typically the insurance agents the slow ones, right, but they'll have errors in their paperwork, right? There'll need to be a lot of back and forth, right? That insurance review process can be a real pain, and it can ultimately delay closing, right? And then ultimately, sometimes what ends up happening is that your insurance number comes back high, right? And then you have to make, some kind of a sacrifice to the type of insurance that you do have, right? Your deductible has to go up. Maybe you're waiving some things that you should not waive on the insurance and what it will cover. So you need to understand, you need to be working with a legit shop that has a good insurance product, right?
Hi, Ben.
What's up, buddy?
I'm waving.
You're waving at me?
Waving,
Okay, that's kind of weird.
things that you should or should not waive. Never mind.
You're getting
Bad joke,
weird,
bad joke.
dude. You're getting weird. All right, let's get to the fun stuff, right? So, quote.strategicinsurer.com, q.strategicinsurer.com. I want you guys to bookmark this. I want you to check it out. If you're in Texas or Oklahoma, they've got a competitive quote for you, right? Houston, DFW, Central Texas, Oklahoma. This is where this guy's built the tool for, and they're doing a great job.
Absolutely,
right?
and it's something that we help put together, right? I mean, we kind of saw the pain here, and really, again, I'm a big software guy, if you guys don't know, right? And insurance should not be this mystical thing right? And ultimately, we're able to kind of work with them to help get a tool built that automates the quote, right? Pretty much to the T, right? Plus or minus 1%, I think. So
yeah, so this
that's
is
what the goal is, really,
instantaneous.
just to kind of, within 5 minutes, have a fully fixed quote. So it's something that we've baked into our underwriting process. And basically, any deal we're underwriting, we run it through this and just kind of get that pulled in. So
Yeah, we've baked it into our spreadsheet, right? And you can absolutely do that, right? I'm sure the guys even at Strategic will help you integrate that. They love the tools. They love ultimately helping their clients, right? So let's talk about it. I've gone to the website now, right? strategicsure.com. Let's get an instant quote, right? So this is how easy this is, right? And I'm just going to plug in some numbers. Let's get started, right? How many units? 136. Okay, I'm just pressing enter here. Average square foot. Let's just.
You guys know the quote? So easy a caveman can do it.
That's funny. So average rent per unit, right?
Don't screw it up then.
Hey, Houston, right? Next, tell us about the amenities. All right, let's continue, right? Are there pools? There is. All right. Are there fitness centers? There's not, right? Or maybe there could be. Who knows, right? Are there sports courts, right? You don't want to have sports courts.
You said it's a Houston deal.
So. I know. Well, no, but I'm going to say, you don't really want a sports court, and I'm going to tell you why. That has a tendency for folks to just loiter and hang out, and it's not as great of an amenity as you'd think it would be, right? So let's push no, because we don't like to have those.
It's a great amenity, just people abuse it.
Well, okay,
That's
great.
maybe
I feel you. All right. So is there any covered parking? So yes. Let's just say yes. Perfect. You're all done. Continue. Right. Where should we send the quote? So let's go to Ben Suttles. Right. Oh, I don't even know how to spell my own name. Jeez, don't laugh
Ben
at me.
does not work very
right?
well under pressure.
Okay, everybody's watching me. So, all right.
You want Ben's phone number? There
I
you
know,
go.
right?
Text that number
I was like, this is going to be recorded. Right?
If you want his email address, go ahead in that file. All complaints there.
All right, so
if you have anything fun and exciting to talk about, feel free to email me instead.
Boom. All right, so this is under contract renewal, just looking, right? So they're obviously looking for, where are you at in the process? Let's say we're under contract, right? Okay. When is the expected closing date? Let's go 05/31/2021.
That's the last step.
Boom. Submit. All right. Last step, click here.
And actually, now at this point, you get a text already. So
all right,
you already get a text and a pricing at this one. Now, if you need something more formal for your lender, right, that's where you can go through this last step and get that PDF.
I've got my cell phone here, folks. We're going to time this thing, right? We're going to call it probably the next 30 to 60 seconds. We'll get a text message with your per door quote, right? And then on top of that, you're also going to get an email, right? The guys at SIG also wanted to have you, if you wanted a more formal quote, right? You click this button that I'm going to show right here, Shanna, if we could, just so we could go show this, right? Just a couple extra steps. All right, let's get a formal proposal. All right.
And this is really, this is only if you need that extra step to go
Property
tell
name.
the lender. So,
right, Porterwood, right? This was the deal that we talked about a couple weeks ago. 1, 2, 3. I really
I have
should
no idea.
not.
I usually have all the addresses
shoot.
memorized, but this one, it's got a lot of numbers in it, so I've not memorized.
Let's just, I know it's in Houston.
It's not, no, you actually got that wrong too, because I think it's not even a Houston
It's in the greater
address.
MSA, all right? All right, so then we're going to go here. Okay, correct email address. Yes, it is. Okay, submit. Boom. All right. So now what's happening is you're going to get a formal proposal, right? This is something that you can give to your lender. You can provide to your team. Maybe you're the one that's running point on insurance, right? And you can ultimately see all the great things that are wrapped up in it, right? All right, so we're getting close here. Boop, boop, boop. Let's go over to the emails. So talk to me about this, man.
So, Mondays, we do this every Monday, 3:30 Central. We are talking about multifamily underwriting, specifically about using the insurance tool to kind of to help automate that.
We already know that.
Tell it to the other people.
No, all right. So, the point of us showing you this, folks, is that I want you to be an underwriting machine, right? And in order to be an underwriting machine, you need to be able to automate parts of this process, right? Rules of thumb are great, right? And for full disclosure, we do use Michael Blanc's sheet. It's got a lot of great rules of thumb, but it's not indicative of across, everything in every part of the country and every property, right?
Agreed.
So you need some more accurate data, right? And this is one thing that will give you the accurate data, right? So, something to kind of keep in mind, right? right? So this tool is something that's going to be able to spit things out, and maybe you're trying to exercise it 5 different times, right? The guys at SIG are not going to care. So, all right, so here we go. Boom. I've got my quote here, per door $583. It gives the breakdown property, GL, and umbrella for a total premium of $79,300, right? Once again, this was just an example deal.
And let's pull up the PDF. So,
all right,
there's kind of as well. So there's an email that you get with a PDF. That's again a nice little tool.
Boom, that's there too.
Send to your lender. So go ahead and.
All right, so we got a formal proposal here.
1 second.
All right, we got it. Shanna, if you want to show this, right? So this is more of a, more formal, right? And it's going to talk about what does the SIG insurance policy include, right? And I think there's one thing that I wanted to talk about because I was in the dark for a lot of years about how the insurance process worked, right? There's a lot of squirrely things that insurance agents do these days, right? When they're not disclosing a lot of this or explaining a lot of this to their clients, right? And that's where the SIG guys do a great job. They are educators in a lot of ways, just as much as they're insurance guys. And so they're showing what is included, what's compliant with Fannie and Freddie, which a lot of us are looking at Fannie and Freddie deals, right? And, ultimately stuff that, and explaining the whole entire process, soup to nuts, right? You need to have something like this from your current insurance agent. If he or she is not prepared to provide you something like this, and it doesn't have to be as fast as what these guys did, right? Obviously this is kind of a little bit bleeding edge, but they should be able to produce this for you within a few days, right? With this level of breakdown, right? What's included, what's not, what are the deductibles, that whole entire thing, what's Fannie and Freddie required, right? And all the things that are, right? So you got to understand that this is, important to let your lender know, right? And once again, let your team know. So, as easy as that, right? I got a text message, I got 2 emails, one with a formal proposal, and it took 3 minutes, 5 minutes tops, right? And it's done, right? And once again, you can run. This is when you can start running some numbers, folks. This is a numbers game. We've told you this a million times. If you take anything away from these videos, it's that you have to get into the game, you have to take action, and you ultimately have to run some numbers because you're gonna have to look at 100 deals to get one under contract and get to close, right? So do you wanna be hitting up your insurance agent for quotes 100 times? You think how quickly they're gonna get burned out on that, right? And then you're gonna go to the bottom of the pile. So this is the other reason why these guys helped develop this, is because they wanted you to run numbers and get something that's semi-accurate. Once again, Texas and Oklahoma, this is where these guys live. This is, where they're gonna shine. But, they're telling me they're trying to expand it, out to Georgia, maybe along the Gulf Coast, So, obviously we'll keep you posted on that. But for right now, if you're looking at deals in Texas and Oklahoma, you need to be using this tool.
Yeah.
That's the bottom line.
I totally agree. So Mondays, it's every Monday, 3:30 Central. And if you have any comments, questions, go ahead and leave them. We will go do the Q&A. So usually we do a bunch of different presentations, then we, we'll shift the Q&A. So if you have any comments, questions, go ahead and leave them.
It feels really weird. Like I'm typically, you're the one that's always on the computer. Like I just feel like I'm kind of boxed in here, man.
Probably for the better. So let's see. So any comments, questions? So let's see. Our buddy Ronnie says, "What's up, guys? We're Dan and Rock.
What's up, buddy?
Here you're getting the other. You're getting the other part of the guys, I guess.
Hey, whoa. What?
We know a thing or two
Chump
about
change
insurance.
or what?
I know. Let's keep going then. So Jefferson says, "How are you doing, Ferris and Ben? We're doing well. How about yourself?"
What's up, buddy? We appreciate you tuning in, Jefferson. You and Ronnie.
A link to the tool, q.strategicinsurer.com. That's strategicinsurer.com.
Yes.
And Tim Vitale says that's awesome. You're welcome. Carlos says that is great. How much will the premium fluctuate historically once policy is actually sold? Well, that's the thing. So it's a fixed
rate.
Fixed rate. So pretty much very little. It's like
no, it's not fixed. That's the whole point of it.
Yeah,
it's
plus
fixed.
or minus 1%. So it's actually meant to be a real quote. So.
Yeah. So I mean, it's fixed until 12/15/2021, right?
Yeah,
it's
go plug it.
It's a master schedule.
Go plug it in right now into some random deal and go see just how it looks and how it works. So you guys should definitely check it out. I mean, feel free to use it on a deal that you're still working on.
And we're not insurance guys, right? Talk to Rock, talk to Dan. Dan has been our insurance guy since the beginning. I've known Dan for 6 years, great guy. just a savant when it comes to this stuff and can rattle it off and really educate you on the nuances of insurance, right? And I think it's important because we pay a lot for this, everybody, right? It's like taxes. That's one of our biggest expense on these properties, and a lot of people just don't understand it, right? And they're just taking it for granted. And there's a lot of things that can fluctuate the numbers and things that when you go to file a claim, you realize, oh, crap. My insurance agent didn't tell me that I wasn't covered for this. Right. And so therefore you're going to have to come out of pocket, right? We've seen deductibles that have been $1 million in occurrence, right? What does that mean? That means you're essentially self-insuring, right? That means that any claim that you're going to file, if it doesn't hit above $1 million, guess what? You're paying that out of pocket. And so, and that's what some of these insurance agents are getting away with. It's highway robbery. It's crazy.
Totally agree.
So, what else we got? Any other Q&A on this stuff?
Any other comments, questions? If you do have comments, questions, go ahead and ask them. We will answer them. And if not, then we will not answer them or ask them.
Whoa. Well, no, it doesn't have to be about insurance, right?
Yeah,
the Q&A can always be about anything you guys want to talk about, right? Real estate related, entrepreneurial related. What are we doing? We're finally traveling too.
Yeah.
Excited about that.
So where are we going this week, Ben?
We are going to Sarasota for Rod Cleef's boardroom.
Which is Tampa,
mastermind.
for those that don't know where that is.
Yeah. So we're excited about that, getting back on the road. Then the following week, we're going to Secret X.
Going to Costa Rica.
So if for people that are been on the fence about going, right, these guys put on a great event. So does Rod. Something to kind of think about.
We do miss traveling and networking.
No, we absolutely do.
Both of us got our shots, so we're good.
So
let's see. So that said, let's see. There's a question. Are these quotes for commercial insurance in general? It's only commercial insurance, multifamily.
No, this is not
nothing
residential.
Else. So
it's just multifamily, right? So that's actually a great question. I'm glad that somebody brought that up, right? This is just for multifamily insurance. So.
All right, so let's see. Any other comments, questions? If not, we can continue. Let's keep going.
All right, man. So we're going to go back to
reality. Oh, there goes gravity.
So we're talking about.
I even got a chuckle out of Shannon on that one.
Oh.
I'm a great singer.
Way to go, buddy. Way to go.
All
right, so we're talking toolkit. Boom. DisruptEquity.com/toolkit. This is where all of our checklists, all the tools, all the websites, all the podcasts, everything that you'd want, all condensed into a checklist that Shannon does a great job curating and keeping up to date. Yes. Right? So we'd like you to check that out. Right? What else we got going on? What are we talking about next week, man?
10 myths of multifamily real estate investing.
And there might be more than 10, but
there's a lot more. Myth number one:
top 10.
Is it a quick buck or not? It's not a quick buck.
My gosh.
So yeah, lots of different myths, and if people have myths, feel free to bring those as well, and we can talk through those.
I think people love this type of stuff, right? It's all about kind of opening up the kimono and saying, hey, these are the things that people might tell you that aren't necessarily true, right? And I think the biggest one is that you do a deal or two and you're going to retire, right? It's not like that, folks, right? You're not making millions and millions of dollars off of one deal, right? If it was that easy and everybody was doing it, there'd be a lot more people than there already is in the space. So, we'll kind of do that. I'm actually excited about that one because there's a lot of that going around.
Agreed.
And we're doing this in between.
Our two trips.
Our traveling. So we are committed to Money Mondays and keeping you guys up to speed on what we're doing.
If we don't make
some of the
it
things that we're
on
doing.
to the following Monday, we decided to probably just stay in Costa Rica.
We might have
another
done
few days just for the fun of it, right? So maybe Ben will do that one solo. I'm just going to stick around Costa Rica.
Heck yeah.
So let's see. So if anyone has any more comments, questions.
Come on, no more comments or questions?
Them. One question is, what has been the price per unit for insurance lately? Can you talk a little bit about that? I know it will depend on a lot of things.
It does depend on a lot of things. I think
it's very location specific, vintage specific.
We know for a fact, just because of some of the storms that have happened in DFW and in San Antonio and those types of areas, that insurance is going up, right? They are going to get their pound of flesh, right? But just assume that insurance across the board is probably going to go up this year in Texas as well. Because of why?
Because of our ice storm.
Right? They paid out billions, and the insurance companies are a for-profit business.
But to answer the question, I mean, we're seeing anything from $350 to $600 a unit. Really depends on a lot of things, right?
Yeah.
And so
the size of the unit,
even
the rent
then,
that's
would
being
you guys know a
charged.
skyscraper that's probably worth 10x an apartment is probably fourth of the insurance cost, right? So
Oh,
again,
right,
it depends
yeah.
on a very big difference of things. And so, is there a fire suppression system? Is there not? So lots to
How
consider.
new is it? How big are the units? How much is the rent? The location, crime score.
Ben going to live there or not? I mean,
know,
he's very,
right?
fire prone, so it's kind of things to think
No,
about.
and they take all that consideration, and then some of the questions, right, folks, that is being asked on this tool are really what's driving the cost, right? You can kind of even see where if you answer one question no versus yes, there's going to be some fluctuation in the cost, right? And it's because each of these things come with risk, right? That's why they call insurance or commercial insurance risk management, right? They're trying to the insurance carrier is trying to mitigate its risk, and it's going to charge accordingly, right? But yeah, here in Texas, 350 might be on the low end at this point, right? I've seen it probably as low as 400.
The lowest, that's what I meant, like the lowest.
Yeah,
I saw 375, 380 on one of the deals.
Yeah, and once again, it goes probably the size of the unit too.
It depends a lot of, exactly. It's all about,
So, check it out. It's meant to be played with, right? And ultimately find out and ask questions, right? Rock and Dan are great guys, and they like to answer all this stuff.
Yeah, another question, is it safe to say upon acquisition of an apartment complex, insurance will go up? No.
No.
It really depends on a lot of things, and I mean, we've seen it go down. We've actually reduced our insurance costs on properties.
Yeah.
So it could go either way. It just depends on doing your homework beforehand.
Yeah, and I'm curious why you would ask that, right? I guess more so it could go up because of the thing that Ferris brought up, which is a really, really good point, right?
Plenty of good points come from me, Ben. Thank you.
Thank you. Pat you on the back there, buddy. So one of the things that we've learned the hard way is that, once again, the people that you're buying the deal from might have a different insurance policy. They might have 10,000 units and you only have 1,500, right? So what do you think? They're going to get better insurance than we are? Yeah, probably. So, it's still the same property, but it's a totally different game when it comes to the insurance carriers, right? They're going to give this guy or gal, because they have 10,000 units, a lot better price than they're going to give us. Right, so you need to quote it out accordingly each time. Don't make any assumptions, right? And I think that's the other thing too. People make assumptions on taxes, they make assumptions on debt, they make assumptions on insurance, and all of these things you need to have a good grasp on, because if you don't and you underwrite a deal under those assumptions and they're wildly off, you could get into a deal and you're upside down, right? And that has happened to people that we know. Right, where they're just wildly off, and then they're trying to make up for it somewhere else, and sometimes you can't. You got to back out of the deal. So this is another reason why you got to use the tool, right? And that's another reason why you need to talk to a mortgage broker, right? If you're about to put in an LOI on a $20 million deal, why wouldn't you want to know what the debt's going to be? You need to understand this stuff, especially when you're starting off, right? So, any other questions?
That's it. So any other comments, questions? Let us know. If not, we will call it a wrap. And we already talked about what we're talking about next week.
What are we talking about? The myths, dude.
10
Come
myths of
on.
multifamily real estate investing.
You need to pay attention, man. You need to pay attention. No, I'm just joking.
Hey, I am paying attention, all right?
Nah, I'm just joking.
I'm only paying attention 3x more than you instead of the typical 4x.
So we're talking 10 myths, top biggest myths of multifamily real estate investing. Once again, we'll be candid. You know how we are, folks, right? We're going to be pretty transparent about this stuff. So stay tuned for that next week. We're excited about it. Check out the checklist in the meantime, and we'll see you guys next week.
We'll call it a wrap.